A little bit of context before I get into it, and I really want to provide some value today, but I also want to really bring it down to not so much a fear-based sort of update. I really want to get some sort of strategies out there as well that you can really use to sort of protect yourself in a time that's very volatile. A lot of things are up in the air. We don't even know, if schools are running or if things are closed, let alone what to do with your money. So hopefully this can, shed some light on what's happening and what's about to come, and not to sort of get scared and panic. And guys, I've always said this in all my content, and I want to make this really clear to you that despite you wanting to use my services or not as a buyer's agent, if you do have a question in this live stream, leave it down below. Or if you want to have more of a personal chat, then do message me and we can hop on a call. Again, I just want to sort of come out here and help people. It's a very interesting time for me, at least, but I can see how a lot of people are getting scared by what's happening. So I just want to sort of clarify things and hopefully help. So in terms of the market, I'm not going to spend too much time on the market. It seems pretty much the same old in terms of the last week and what's happening now, with the share market dropping again by 7%. So that's about $100 billion wiped out again. So it's a really sad time for basically your super accounts. And unfortunately, you're in a position now that I think year to date, we've dropped about 37%. So it really doesn't make too much sense to sort of start taking that out or selling positions. I think you're going to have to ride the wave now. I do think we've probably got another 20 to 30% drop still to go. You can sort of get in that position where you try and, take out your money, but that's still going to take 10, 15 days, and you don't really know where the market's going to be in that time. So I wouldn't suggest doing that. I think you just now have to ride the wave, but understand that this is a time where you can take a step back and pause, really understand your positions, what you want to do in the next year, the next 5 years. And this is a perfect opportunity. I mean, you've got no excuses. You're really isolating yourself. You're sitting at home, maybe working from home. So it's the perfect time to recount, re-energize yourself and understand where you need to get educated. So obviously with the lockdown, it got introduced. Some people are coming to social media and talking about how it's not really a lockdown because there's still so much still open. But you may not realize that we're in stage 1 of the lockdown. So stage 2 is going to be basically everything apart from maybe doctor surgeries, hospitals obviously, and supermarkets. But we will get to a phase where we won't be able to travel outside to, get your hair cut, like I need one. You're basically going to get put into a position where you can't leave your house, and we will get there. The government is trying to almost sort of balance it out, where they're going, we don't really want to lose all this economic activity that's remaining in the system, but we also don't want to cause more harm from a health perspective, right? Unfortunately, you can't have best of both worlds. I've been sort of saying this for a while, that you need to have a complete shutdown. We need to go into recession. We need to have the economy basically fall through the floor. We need to have the economic disaster. We need to have it. And unfortunately, the governments all around the world are trying to keep the markets propped up so that we can avoid the depression that's going to happen. Now, I've explained this before. There are a couple of people here that are new, so thank you for joining. But basically, a recession is 2 consecutive quarters of negative growth. Now, the first quarter, we may just scrape through with positive growth, given, the coronavirus has really only affected our economy in probably the last month or so. But we will definitely have one in the next quarter and the next quarter after that. So 2 consecutive quarters will get us into a recession, a technical recession. However, there are some industries that are already in recession. Don't get scared and caught up by this word. During the GFC, we actually didn't have a recession. We were sort of insulated from the entire disaster that, the subprime mortgage issue in the US that happened. And that was primarily because our economy is so tied up with China. And we're realizing that now, how big of a decision that was to not diversify and just rely on one economy. So China happens to go down, we go down with them. So we are going into a recession, and then after that, 4 consecutive quarters will deem a depression. Now, I don't want to scare you, and again, this is not about panicking, about sort of being the guy that talks like the world's going to end. I just want you to realize the ramifications of something like this so that you're educated. This is not about getting you scared, it's about getting you prepped for what's about to come. I often see it as, if there's something scary in front of you, by just simply closing your eyes, you're being ignorant that it's going to disappear. What you really need to do is put yourself in a position to really protect yourself, safeguard yourself and your family, and we're going to see really tough times. I think the numbers coming out of the US, they're saying anywhere from 20 to 30% unemployment. We will see a similar thing here. In a different video, I can go through what exactly our unemployment numbers look like, because they're not what they say they are. They haven't changed the way they account for unemployment in Australia. And it essentially means that if you work 1 hour a week, you are deemed as employed. Now, we all know 1 hour of work is not really going to keep food on the table, so that is not how it should be calculated. But we can get into that into another video. But again, it's really about stopping the panic, understanding what you can do, and how you can safeguard yourself. I see there's quite a few people on now, so thank you guys for joining. If you do have any questions, do leave it down below, and I can answer them all at the end of the video. The other part I wanted to talk about was the stimulus package. Now, there was one announced about a week or so ago, and then another one got announced yesterday. Now, the important thing to note here is it will not be the last stimulus package we see. Well, the world economy is heading into one direction, and we haven't even gotten there yet. We're 1 week into a bear market, and they are pulling out all stops. They are in emergency mode. They are going to leave no stone unturned, which really means that they are going to do everything possible to avoid a recession and depression that we're going to head into inevitably. What that means, in simple terms, is if we've introduced 2 stimulus packages before we've even hit a recession, what do you think is going to happen when we get there? And that's the real question here, guys, that if we're already seeing government spend so much and go further into debt, what's going to happen when we actually end up here? They're trying to do everything now preemptively. I actually think it's counterintuitive. I think they should actually let it go, have us fall through, and then try and pick up the pieces. But I mean, that's the decision they've made, and it's just about you guys getting yourselves positioned in the best way to take advantage of it. Because the truth is that these things will happen, and a lot of the macroeconomic activity that happens is very much out of our control, right? So instead of thinking about what can be done and can't be done and what can I control and can't control, you're better off actually focusing on your own actions. Focus on what you need to do so that you can move ahead in the next 3 to 6 months. A lot of people are saying that, people will lose jobs, the market's going to crash, like the share market, the property market's going to crash. The truth is there will be a decline in the property market for a short period of time. Now, understand this, that the government cannot allow property to fall at these ridiculous amounts that people think they can fall at. The media will come out any day now saying 30 to 40, maybe 50% we're going to drop in the property prices, but it will not happen. The truth is that for the property prices to actually come down, you need to have buyers and sellers. Now, if as part of the stimulus package, the government's supporting banks to go, hey, you know what, let's freeze repayments for 6 months. Why will people want to sell their homes if now they don't have a tenant? 6 months, they don't have to pay repayments. And the government's already backing this by giving them liquidity in the background. So if now you don't have to sell your home for the next 6 months while you lose your job, When we get to 6 months, I can assure you we are actually going to extend that if we are still in the same position we're in. Now, I don't foresee the coronavirus leaving anytime soon. I also don't think the ramifications of the economic disaster that comes with it is going to leave anytime soon. But they will face problems, the government, I'm saying, it will face problems where we will see underlying inflation kick in. And this is where it ties in with what I really want to talk about today and provide some value as to how you can really safeguard yourself and your parents and get them educated, is that your money is losing value, right? So you're really in a position where the share market is going to shit and it's going to continue moving down and losing. You've then got cash in the bank because you're scared, you don't know what to do with it. So you're going to go, well, at least I've got cash in the bank in case I lose my job. But then I'm coming out and saying that the money that you have in your bank account is actually losing value. So whatever you've worked so hard for, you're actually letting go of it every day, every hour. All these stimulus packages that come out, it puts our economy further into debt. We're devaluing our currency, and it pretty much puts you in a position that you either accept that your money loses value while it sits in your bank account because you're scared, or you actually do something with it. Now, I've been saying a lot recently, and I've been very vocal about this, that you need to attach your money to hard assets. So if you can get into gold and silver, that's a good place to start. If you don't know how that works, you can, message me, we can have a chat. But right now, it seems like the, most simplest sort of solution will be about maybe giving me a call and I can talk to you about a tailored solution for yourself. I do say that tread very carefully when it comes to purchasing property and investing. So if you're taking my advice as, it's general in nature, obviously, but if you take my advice as to maybe I should invest that money somewhere into property, be very careful where you invest it. People will lose a lot of money in the next 6 to 12 months. And I say that to give you a reality check. You can read 100 magazines about property and look at every article that comes out and listen to every buyer's agent that ever talks online. But the truth is, unless you're in the trenches and unless you're actually physically doing these things, I would say stay clear and get a professional on your side. If you are paying $10,000 for a buyer's agent for their fee, and they happen to pick a right area that's going to save you $20,000, $30,000 in a year, it's a real big no-brainer. A similar way to you really trying to fix your car, you could actually do more damage to your car. So you would actually take it to a mechanic to get it fixed professionally. I'm saying the same thing about your finances. You really need to get it in check and take advantage, because as much as this is a really scary time for 99% of people, the 1% will actually action this and take the opportunity. A lot of people that have actually joined the live stream, thanks guys, I've spoken to you guys about how right now, if you can take advantage of the system and where it's heading, you could actually grow your net worth a lot quicker in the next 3 years. That's never been possible. So the growth that you can have in the next 3 years, you will not experience in the next 10, and definitely not in the last 10. So really understand and get educated about where you're purchasing. Everything you thought that you knew about the property market is going to be flipped, and a lot of things that the government are saying that they will never do, it is extremely unlikely. These things will happen. So a similar conversation the Australian government had in the RBA was that 42 days ago, they had said it is very unlikely or extremely unlikely that we will have QE, so quantitative easing, and that we're going to go to 0.25%. It took them 42 days to get to the point where we got to 0.25% and quantitative easing of printing of money, and the repo market was in full-blown action. What do you think will happen when they have been saying all this time that negative interest rates will not happen? It is going to happen. Guys, learn from these things. Understand that you can, take in all this knowledge, but unless you're going to action them, they're not really going to do anything for you. And you're actually going to be the bigger idiot because you actually knew what was happening and you actually didn't act upon it. So I really urge you to, actually go out there and action these things and protect yourself and your family. When we're on the topic of negative interest rates, just because you think, it's absurd, it's never going to happen, you talk to any guy that's in a bank and he's going to say, no, it's not happening. It's because they don't understand themselves what's happening in the macro economy. The world economy is shifting so quickly, and the global pandemic is actually just fueling that as a catalyst. But we will see a huge disaster. But I'm saying don't panic. There are things you can take opportunity of. There are actually a lot of buying opportunities. I've actually emailed my broker only last night saying, look, what's left in the tank? Can we borrow some more? Because I want everything. I want to borrow everything I can. The banks are offering 6-month freezes on loans. There's unsecured loans of up to $250,000 that they're offering. So there's a lot of opportunity there if you know where to look and the right places to sort of find these deals. In terms of negative interest rates, right, just quickly before I get into what I would say is the best way to survive the next 6 months or to a year, Danish banks are doing 10-year loans, okay? So they're doing 10-year fixed loans. Do you know what the interest rates are on those? There's minus 0.5% interest, okay? So let's just put that into context. Banks here will offer, say, 1 year to 5 year loans fixed, and they may be at, say, 2.5% or 3%. So let's say 3%, and you've got $1 million worth of debt. 3% of that means you're basically paying $30,000 in the year for interest repayments. Now, these Danish banks have actually gone, okay, well, we're up shit creek, so we need help. We need you guys to invest your money. So they're offering 10-year fixed loans at minus 0.5%, okay? Which basically means that not only are you not going to have to pay 3%, 2% interest repayments, at the end of the 10 years, your principal amount will actually be less because the bank is paying it off for you. So if you think that these negative interest rates will not happen because they're extremely unlikely, or that Ravi doesn't know what he's talking about and these things will never happen, these things are happening in the world, you just don't know. And this goes to my point about how you don't know what you don't know, and you really need to get educated about how to find about those things, but also get your head screwed on right. Like, do you understand that professionals in the area are professionals for a reason? If you were a professional in that area, you would have done a lot more with your money. And if you're currently scared, even 10% in this market, it means you're not educated enough. And that's okay. That's because you're not interested as much as someone like me is in the area. So I don't want this to sound like a salesy pitch. I'm actually offering this as a free service. I'm actually saying, give me a call. Let's have a chat so you can get a little bit more educated about what to do and how you don't have a situation where in 6 months, your parents have lost your jobs, right? So they've lost their jobs. They don't know how they're going to pay for their mortgages. I mean, yes, they could freeze it, but what happens after that? And then they've got issues with going, well, now we've got financial stress. But you know what? You could have done something about it. You understood where the market was 6 months ago because we watch all these live sessions that Ravi puts up and his YouTube channel. So definitely, if you haven't subscribed to the YouTube channel, we're in isolation, so I've got nothing better to do than to make property videos, so I can provide some entertainment there. But guys, survival kit. Okay, here we go. Basically, the best way, apart from you guys saying that I want to save my money, okay? I want to be able to go, okay, I'm going to put my money in a bank account. And that way I've saved the money. And so if something bad happens, I have that to rely on. Okay. Guys, what you do is very simple. And you may not even have to do anything about it because your parents have probably done it without noticing. What you need to do is have your parents, if they own the house that they live in, that you guys live in, let's say the family house, if they say purchased it 5, 6 years ago, whatever it was, there is some growth in that property. What you guys should be doing, and this is not financial advice, so I don't get sued. We can have a chat further in detail. Just send me a DM and we can have a chat. But what you do is you basically get your parents to have a broker look at it, get them valued, and then you extract a level of equity out of the property. What happens with that is you don't actually repay the loan that you've taken out. Like, let's say your loan was 400,000, but now it's going to become 500,000 because you've taken 100,000 out. It doesn't work like that. The bank will see it as though, yes, your loan attached to that property is 500,000, but in fact, 400 is for the loan and 100,000 was taken out as equity. Now, when I talk about equity, I just want to really, simplify things so everyone understands this. When you've got the 100K, it will come into your bank account as if like cash was sitting there, okay? Literally like cash. So 100,000 will sit there. Now you don't have to pay interest on that unless you use it, okay? So let me get you guys on the same page again here. 100K comes out of the property, the family house. It's gonna sit in an offset account. The 100K sits there and you don't pay interest on it. You don't do any repayments. It just sits there. The reason I'm saying this makes more sense is because it's not real money, okay? It's not real money. It's attached to a debt, which is the house, and it allows you to have a safeguard to protect you when things go haywire, versus you thinking it's a better idea to keep my cash in my bank account because your cash loses value. Whereas the equity that you're going to take out will sit there and it's attached to an asset. So even if inflation kicks in, your asset value is going up. So you've taken out the equity, you're just having that sit there as sort of a safe keep. It allows you to have that safeguard, that protection for if, like, for instance, your parents lose their jobs, or if they're in business and they suddenly don't have customers or they can't open their doors to people. This allows you to be in a position to protect yourself and your family. What I don't want people to be seeing this and going, oh my God, I'm panicking, my money's in the share market, or it's just sitting there as cash. That's the worst thing you could do right now. I'm not saying and advocating that you need to go out and buy property, but I can tell you now, if 99% of people are scared, okay, if 99% of people are scared, they tend to do nothing. Okay, guys, you're probably gonna do nothing because you're scared. You're fearing what the unknown looks like. That's why I'm here to educate you as to what is happening and what you can do about it. But essentially, if 99% don't do something, the 1% get richer, it's because they actually take action. So guys, the difference between winners and losers is action and execution. So guys, again, I didn't want to make this too big. I wanted to dip into government bailouts, but I think that's going to be a topic for next week because we're going to see a lot more damage done on that front. But if there's anything I could leave you with, take some action, and I'll just answer some questions here. So Karthik, what does a strategy session with a buyer's agent look like? So essentially a strategy session is really me trying to get an understanding of your goals, your vision, and allowing that to become the pillars of what your blueprint strategy will look like. So you sit there with me, we have a conversation for about 90 minutes and it's very free flowing. You tell me basically what your financial position is currently, and we go through where you want to end up. The real issue is that most people don't know what's possible, purely because we never got taught these things, and understanding that if we can get some education around what is actually possible, your goals are going to change. What I thought was possible 2 years ago to what I think is possible now is very different. And that's why it's very important to attach yourself with a mentor or someone professional who's gone out and done a similar thing to what you want to do, which is financial freedom and asset collection, really creating generational wealth, and financial freedom is the end goal, right? So we literally sit there, I go through and ask you some questions, I explore what a property purchase looks like, I break it down for you on a very simple basis, and that allows you to understand the cash flow position of, you know, having a property that you purchase. Is it taking money out of my pocket? What does it actually mean? So I break it all down for you, and it's a really fun session. I look forward to it, and I had 3 last week, so things are looking good, and those guys are looking at purchasing. It's a very hands-off way to, you know, invest in property, because it allows you to rely on the expertise of, say, someone like myself, especially if I'm buying in suburbs I've already bought in. So for my clients, it would make sense to purchase in those areas, especially if there's still some growth there. If the fundamentals still stack up, then like it makes no sense for you not to look at those areas. But again, your level of reliability and confidence in purchasing in a particular area is different to what mine would be, purely because I'm researching and doing this on an everyday basis. So following a strategy session, I'd literally bring out the plan, plot everything down for you in line with your goals, and I would hand it to you. And you could basically at that point say, see you later, Ravi, I don't want anything to do with you. Or you understand the value of a buyer's agent, and I will walk you through the process from researching to negotiating and then actually settling on a property. Okay, so we have another question, Rahul. The same Danish bank is currently considering offering 20-year fixed loans at 0% and 30-year mortgages at 0.5%. Insane. I totally agree, dude. So anyone that's new into the live stream and missed when I spoke about this, Danish bank is offering minus 0.5% loans on 10-year fixed loans. One of the guys has actually just said that you know, they're offering 20-year and 30-year loans at 0.5%. Guys, you would pay the entire loan amount down and it wouldn't cost you pretty much anything to hold. So guys, that's all I've got time for today. Thank you so much again. Stay safe. And if you have missed any part of this episode, or you want to see this in a more comfortable situation where you don't have to hold up your phone, then definitely catch me on the Search Property TV YouTube channel, which I record on that camera there, so it looks all nice and pretty. And I'll catch you guys on the next video. Peace out, guys. Thank you so much again for joining me on the weekly show. I promise to bring you a lot more in terms of content, personal finance related, as well as property investing. In a time that's very confusing for most people, I really want to, go through the myths and bust them. So a myth buster, I guess, so that you can get educated rather than fearing the system and what's happening. So guys, as always, subscribe to the channel if this is something that you're interested in. I'm not sure why you wouldn't. And if you haven't already, then please go to the website, download the ebook. And if you are taking this seriously, where you want to get ahead in 3 or 6 months or a year's time, why not get educated now? Book in a call while things are not busy for me. And we can make arrangements to sort of have these strategy sessions in place so that you're best positioned to actually action it when things are more comfortable for you. All right, guys, so I'll catch you guys in the next video. Thank you.